Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else.
Friends, welcome to another video on your channel Profit in Equities. If you like our content, please don't forget to hit the like button. Also subscribe to our channel, click on the bell button and choose all notifications to receive important financial updates from our channel at the earliest. Now, Anand Rathi is one of the most prominent stockbroking institutions in India. In this video, we'll be talking about 5 stocks which Anand Rathi is betting on from a 1-year perspective. Now, all of these stocks are fundamentally sound names and have opportunities to grow if they get their acts right. A word of caution, however, please don't just jump in, wait for the right opportunity when these stocks are available at attractive valuations and then go ahead and take your decision about entry into these stocks. Also friends, if you are benefited by the content on this channel, please don't forget to share these videos. This helps the channel grow and us to produce more better content for you in the future. Please watch this video to know more. Now the first stock on the list is Aarti Industries Limited, which is available at Rs 1245.55 and the face value for it is 5. The target price by Anand Rathi has been set here at Rs 1600. The symbol for it is AARTIIND. Now Aarti Industries Limited is a manufacturer of specialty chemicals and pharmaceuticals. The company is also engaged in the manufacture of home and personal care products. The company operates through 3 segments, which are specialty chemicals, pharmaceuticals and home and personal care chemicals. Now the company is one of the largest producers of benzene based derivatives in India and has a global footprint. Continual capex has enabled it to grow in a sustained manner. The expansion and the new toluene setup assures that the company will grow at a CAGR of more than 20% over the next 3 years. Even though the market bled, this stock has been on a beautiful uptrend. A lot of wealth has been created in this stock. The market cap of the company is 10,126.32 crores, which means that the company is a mid-cap one. The EPS of 42.15 translates into a price to earnings ratio of 29.55, which is slightly more expensive when compared with the industry PE of 24.49. The book value of 186.37 translates into a price to book ratio of 6.68, which is on the high side. The company has a dividend yield of 0.08%, whereas the promoter holding is just above average and stands at a figure of 53.00%. The 52-week high is 1445, whereas the 52-week low for the stock stands at a figure of 875.00. Now the second stock on the list is Zee Entertainment Enterprises Limited, which is available at Rs 455.20 and the face value for it is 1. The target price here has been set at Rs 530. The symbol for it is ZEEL. Now Zee Entertainment Enterprises Limited is a media and entertainment company engaged in providing broadcasting services. The company operates through content and broadcasting segment. It offers content in multiple languages and offers approximately 38 international and over 30 domestic channels. Now, as is evident from the 1-year chart, the company consolidated for the first few months of the year, but since then has been on a vertical decline. The market cap of the company is 43,720.28 crores, which indicates that the company is a large cap one. The EPS of 18.01 translates into a price to earnings ratio of 25.27, which is largely in line with the industry price to earnings ratio of 27.79. The company has a book value of 60.59, which translates into an expensive price to book ratio of 7.51. The dividend yield here is 0.64%, whereas the promoter holding for this company is a bit below average at 41.62%. The 52-week high for the company stands at a figure of Rs 619, whereas the 52-week low is 410.60. Now friends, with the upcoming state and national elections, this company may stand to gain from the spend on political advertisements and other related items. So please keep it on your radar and monitor it for levels when the price becomes attractive. Now the third stock on the list is Asian Paints Limited, which is available at Rs 1235.40 and the face value for it is 1. The target price here has been set at 1471.00. The symbol for it is ASIANPAINT. Now Asian Paints Limited is a paint company. The company is engaged in the business of manufacturing, selling and distribution of paints, coatings, products related to home decor, bath fittings and providing of related services. The company's business segments are paints and home improvement. As is evident from the 1-year chart, the company consolidated for the first few months of the year then went on an uptrend. However, it had not been able to sustain the gains and has corrected in the recent past. The market cap of the company is 1,18,499.29 crores, which indicates that the company is a large cap one. Now, the company's vast distribution network gives it an edge over its peers. Anand Rathi expects the Indian paints industry to grow at around 8 to 12% over the next few years amid growing demand. If that happens, this stock is expected to exponentially benefit. Now, the EPS for this company stands at a figure of 21.23, which translates into an expensive price to earnings ratio of 58.19, even when viewed with its industry PE of 54.83. The book value of 81.30 also translates into a very expensive price to book ratio of 15.20. The company has a dividend yield of 0.70%, whereas the promoter holding for this company is just above average at a figure of 52.79%. The 52-week high for this company stands at 1490.60, whereas the 52-week low for the company is 1090.10. Now friends, please remember that this is an evergreen stock, and if you can get it at attractive prices, the stock would eventually end up making money for you. Now the penultimate stock on the list is Biocon Limited, which is available at Rs 661.05 and the face value for it is 5. The target price here by Anand Rathi has been set at 823.00. The symbol for it is BIOCON. Now Biocon Limited is a biopharmaceutical company. The company focuses to reduce therapy costs of chronic diseases like autoimmune, diabetes and cancer. Through its products and research services, it is enabling access to affordable healthcare for patients, partners, and healthcare systems across the globe. Key developments during the quarter gone by include the approval of Fulphila biosimilar, which is co-developed by Biocon and Mylan for launch in the US markets. Anand Rathi expects the company to grow at a CAGR of around 29% over the next 2 years, which should also result in an improvement in its profit margins. Now, as is evident from the 1-year chart, the company went on an uptrend in the first few months of the year, but since then has been consolidating at around the same levels. The market cap of the company is 39,663.00 crores, which means that the company is a large cap one. The EPS of 6.90 translates into a very expensive price to earnings ratio of 95.80 when compared with the industry PE of 29.96. The book value of 112.30 also translates into an expensive price to book ratio of 5.89. The debt to equity here is 0.5108, whereas the return on equity for this stock stands at a figure of 0.0800. The company has a dividend yield of 0.15%, whereas the promoter holding is a strong number and stands at a figure of 60.67%. The 52-week high for the stock stands at a figure of 718, whereas the 52-week low for the company stands at a figure of 343.55. Now this stock trading close to its 52-week high shows that the stock has not really corrected even when there has been carnage in the markets. This indicates its relative strength compared to the other stocks which are available. Now friends, also remember that this stock stands to exponentially benefit by any rupee weakness, and this is also one of the major reasons why this has been an outperformer in the recent past. Now the final stock on the list is Aditya Birla Fashion and Retail Limited, which is available at Rs 181.90 and the face value for it is 10. The target price here has been set at Rs 237.00. The symbol for it is ABFRL. Now Aditya Birla Fashion and Retail Limited, formerly Pantaloons Fashion and Retail Limited, is a fashion and lifestyle company. The company is engaged in providing branded fashion apparels and accessories, the retail side of clothing, footwear and leather articles in stores. It operates through two segments, which are Madura Fashion and Lifestyle and Pantaloons. Now, as is evident by the 1-year chart, the company did nothing for the majority of the year, however, had a vertical rise, but again has corrected a slight bit. The market cap of the company is 14,037.64 crores, which indicates that this company is a mid-cap one. Now, the company's brand portfolio consists of Madura Lifestyle, Pantaloons Fashion, Fast Fashion, and its newer businesses. It is strengthening its private label mix by improving its price value proposition and network expansion. The management expects the innerwear division to grow at 2 times in FY19 to Rs 200 crores. Now the EPS for this company stands at a very low figure of 1.86, which translates into a very expensive price to earnings ratio of 97.80. However, when viewed with its industry PE, the stock is not really very expensive compared to its industry standard. The book value of 14.14 translates into a price to earnings ratio of 12.86, which is also a bit on the higher side. The company did not pay out any dividends, whereas the promoter holding is a strong factor and stands at an above average figure of 59.24. The 52-week high for the stock stands at a figure of 215.75, whereas the 52-week low stands at a number of 132.10. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended to be a piece of news. Also friends, this is not our own research. This news was published on a financial website and we will be providing a link to the source for this video in the description section. Please go through the URL to build more conviction around your investment decision. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.